In the summer of 2008, a titan of Wall Street, Lehman Brothers, collapsed into bankruptcy, unleashing a financial earthquake that reverberated across the globe. This was not merely the fall of a company, it was the shattering of an illusion. For over 150 years, Lehman had been synonymous with American finance, a bastion of ambition and innovation. Yet beneath its polished veneer lay hidden fractures, blind spots born from overconfidence and relentless pursuit of growth. No one saw how quickly this colossus would crumble. Lehman Brothers was more than an investment bank. It was a symbol of the era's financial might and complexity. Its reach extended deep into markets worldwide, underwriting deals and creating financial instruments that fueled an unprecedented credit boom. The firm's importance was undeniable, but so too was its growing exposure to risk, particularly in the housing market, where it had aggressively expanded its holdings in mortgage-backed securities. Early warning signs were subtle but persistent: rising defaults in subprime mortgages, swelling debt levels, and an opaque web of off-balance sheet liabilities. Yet Lehman's culture, driven by fierce competition and buoyed by soaring profits, fostered a collective blindness. Executives and traders alike operated under the assumption that housing prices would continue to rise indefinitely, dismissing caution as a weakness. As the housing bubble began to burst, Lehman's vulnerabilities were starkly exposed. The firm had amassed vast positions in complex assets whose values plummeted as mortgage defaults soared. It relied heavily on short-term borrowing to finance these positions, leaving it dangerously exposed to shifts in investor confidence. When doubts about Lehman's stability surfaced, creditors and counterparties began pulling back, triggering a liquidity crisis. Management's efforts to reassure markets were undermined by opaque disclosures and conflicting signals. The leadership grappled with an impossible choice: continue betting on recovery or face the consequences of admitting their perilous position. Three critical moments defined Lehman's descent into catastrophe. First was its reckless expansion into subprime mortgage securities, a bet that promised immense returns but came with hidden hazards few fully comprehended or acknowledged. This decision reflected not only market pressure but also a hubristic belief in the firm's ability to manage risks others could not. Second was the mounting leverage. The heavy use of borrowed funds magnified losses and eroded flexibility when conditions worsened. Third came the collapse in investor confidence itself. Once lenders and trading partners began doubting Lehman's solvency, liquidity evaporated overnight. Attempts to secure a government bailout or private rescue failed amid political reluctance and rival firms' hesitance to absorb Lehman's liabilities. Behind these events were very human dramas. Executives driven by ambition yet constrained by fear. Traders chasing ever higher profits even as alarm bells rang faintly. A leadership grappling with denial and hope amidst mounting evidence of collapse. The firm's fall exposed how psychological blind spots, overconfidence, groupthink, and risk blindness can amplify structural weaknesses until they become fatal. Lehman Brothers' bankruptcy sent shockwaves through global markets and marked the deepest point of the 2008 financial crisis. Its failure revealed fundamental flaws in risk management practices and regulatory oversight that many had ignored or underestimated. The lesson is stark. Unchecked ambition and collective denial can transform success into disaster. Prudence, transparency, and humility are not just virtues but necessities in managing complex financial institutions. As we reflect on Lehman's demise, we must ask ourselves, was it inevitable once risks became unmanageable, or could earlier recognition and decisive action have altered its fate? What moment marked the true turning point? The expansion into risky assets, the surge in leverage, or the final loss of confidence? I invite you to share your perspective on what sealed Lehman Brothers' fate and what lessons remain vital as we navigate future financial uncertainties.